5-star copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns. Smoke on effect.
Hey, what's up, y'all? This is Andrew from the Options Millionaire community. Thanks for taking the time to watch this video. Today, we're going to be going over how to identify changing market cycles. As you may or may not know, I am a VPA trader, which means volume price analysis. Most of my thesis is heavily dependent on a woman named Anna Coling, who has written this book, The Complete Guide to Volume Price Analysis. And I'll be referencing this book frequently throughout this video. What these teachings allow me to do is to identify when the market begins to shift, when the tides begin to shift, so to speak, in the market. When do we change from an uptrend into a downtrend, from a downtrend back into an uptrend, or when can I anticipate breakout from consolidation, whether it be up or down? I'm going to go over exactly what I look for and when I look for things on the chart, and then I'm going to give you a live example of how I executed based on this thesis in the recent past couple of weeks. Let's get started. There are 4 different market cycles that you need to be aware of: accumulation, markup, distribution, markdown. This graph, figure 5.18 out of the Complete Guide to Volume Price Analysis book, visualizes what this looks like. Accumulation is when buyers step in to break out to the upside out of a consolidation into a markup phase. Distribution is where sellers begin to hit to initiate the shakeout to enter into a markdown phase. This cycle repeats over and over and over and over again on all different time frames, from the short-term 5-minute all the way up to the monthly chart. If you notice on this chart is that the accumulation phase at the bottom is finished off with what's called the buying climax. And at the top here, the distribution phase is finished off with a selling climax before the markdown. And to drill down further into that, we're going to look at what a buying climax is. And that's highlighted here on figure 5.20. The buying climax notates a very large influx of buy volume from an institutional level that signifies that buyers are now ready to shift the market higher after a prolonged consolidation phase. You'll see this manifest itself on the charts by several red candles that are immediately bottom wicked on the daily chart that close with a hammer candle bottom wick that eventually leads to a breakout phase above the prior resistance. And on the other side of the tape, we have the selling climax, which looks like this, figure 5.19. The selling climax is just the exact opposite. This is a last effort by sellers on the institutional level to sell their inventory before the large markdown phase. You'll see this represented on the chart by many up thrusts or green candles that are immediately top wicked on the daily chart. Multiple top wicks with increasing sell volume that eventually leaves the price action to break through support and transact to lower prices. The selling climax is the way that institutions or large money begins to unravel their positions. They can't do it all at once because it'll create way too much selling, way too much fear, and it'll drop the prices far too fast. They instead have to begin a campaign of selling. You'll see this, the news cycles will shift into a bearish territory. You'll begin to see a lot of hit pieces across the market. You'll begin to see a lot of negative or bearish reactions to data. Across the price actions, you'll see many top wicks. You'll see green mornings and afternoon red sessions over and over and over again on repeat. You'll begin to see that many bullish attempts that have normally held or gone even higher are now beginning to fail and retest prior day's lows. In addition, you'll see increasing selling pressure on the daily chart. Now let's take a look at the chart here, starting from October of 2023 and going to current April of 2024. You'll see that after a prolonged sell session, the buyers begin to hammer the tape and transact up very aggressively and very easily, with very little sell pressure whatsoever. We in the community remain very bullish throughout all of this, buying up all red and continuing to play the flows higher. Now, out of all this, from October of 2023 until January and into February, we saw virtually no selling. It wasn't until January that we began to see a little bit of uptick in selling, but still nothing really to be afraid of. Not until January 31st, late January, early February, did we see our first increasing sell pressure. And this was our first example of beginning to see a little bit of selling into higher prices after about 2.5 to 3 months of strong buying. However, if you notice, we still had decreasing volume on all of this stuff. In order for me to want to be able to flip bearish in a long-term uptrend, I need to see increasing prices, not decreasing prices. We did not begin to see this until March, when increasing volume started to come along here, more specifically, increasing sell pressure. This tells me that we are now starting to reach into a large block of supply orders up here. And this right here is precisely my objective. I am trying to figure out on the charts where we enter a large block of supply orders. Institutional supply orders that are going to allow the buyers to transact into that area, and large money begins to transact these large sell orders to indicate at least a temporary market top. And the great thing about this is that it provides traders two different options. You can either, one, begin to close out long-term positions or at least set a stop on them, or two, begin to position yourself into a downside or short position, however aggressive you want to play it. But when I began to see increasing sell pressure on the daily chart here, that began to tell me that we are entering into supply. In fact, publicly in the community, I actually began to flip bearish the second week of March, which is right about here. Why? Because I identified that we had increasing sell pressure. We had instances of morning bullishness and afternoon bearishness, and these cycles began to hit with more and more sell pressure as we moved up. So that tells me, obviously, that we are beginning to enter into some sort of supply that's going to lead to at least a temporary top. Now, as you could see here, that as we got into the supply area, that doesn't mean that we're going to go straight up and then straight down. There is a period of consolidation that, as identified in the prior figures, is called distribution. Distribution is the consolidation phase where the sellers need to spread out their selling over a period of weeks or months so we can begin the markdown phase. And that's what I believe we entered into in early March. Now you see it took from early March into mid to late April on the ES in order to finally begin to mark down. So this requires a great deal of patience and analytical astuteness on the charts to be able to actually execute this type of trade. Otherwise, especially if you're trading options, because you can really face a lot of theta and you have to be really nimble on your positions if you're not timing this just right. So me personally, looking back on March 8th, I'm thinking to myself, what do I need to see to begin to possibly either enter downside positions or simply stop going long? Now, like I said, I began to stop being bullish and shift more to bearish early March. Now, yes, from here we did go up a little bit more, but that's fine. I don't mind missing out on a little bit of gains after such a strong bullish run if it meant being safe and waiting for an opportune moment to either close out long sides or even get short. So for my mind, what I'm thinking here is I need to see a selling climax. Now that goes back to figure 5.19, where I'm looking for multiple upthrusts or bullish action that are immediately hammered back down with volume. And the key word there is immediately with high volume. If the bulls continue to move higher, that is not necessarily something I want to see for distribution. I want to see continued sell pressure with high volume to get me into a prospect of that we are reaching the selling climax, which is basically the fireworks show. It's the finale before we enter the markdown phase. Now, it took a lot of patience and it took a lot of back and forth, but I finally began to see it in April. In fact, what I identified as the selling climax was April 4th, which was this session right here, which had the bulls rocket ES from 5230 up to 5300, which is about a 70-point move very quickly. And then promptly the sellers crashed this thing back down with high volume right here. We see an increase in volume here on that move. I identified that as the selling climax. Now, this was one final thrust up after a two-time rejection here at 5,300 and change. This one failed. And then we had the big up thrust here, got everybody nice and bullish. And then they hammered that candle down in the morning of April 4th under a high volume. I identified that as a selling climax. That means the market is getting ready to shift lower. So what did I do? I entered into a 6-week SPX 5,000 strike put on April 5th on this candle right here. Now, if you notice, it took me over a month of being patient to finally be able to take an executable down trade. Just because I became bearish in March doesn't mean I'm slinging puts every day, expecting the market to roll over and getting smoked. You have to be very patient and wait for the signs. This was the first instance of entering into distribution. I know distribution is going to be a consolidation phase. I just don't know how long. So I have to wait for the selling climax, which I believe we got on April 4th, which led me to executing a put on April 5th, nearly a month after I entered into a bearish bias. From here, I rode the position down for about 2 weeks, eventually closing out the put on April 19th on this candle right here for a very sizable profit. And just like I entered on a high volume spike, I elected to close out the position on a high volume spike as well. We had a very aggressive high volume spike. We had a very aggressive bottom wick on this candle, which shows that we could be hitting at least a temporary bullish demand zone here. So I elected to go ahead and close out my downside positions and reevaluate on any further price action. Now also notice I didn't do anything with any kind of EMAs. I didn't do anything with any kind of MACD, RSI, any kind of indicator. This is simply using what the market is actually doing with price action and volume, which I think is a huge benefit for seeing what the market wants to actually do. I made this trade strictly on price action and volume, which is something I do every day. But this trade right here was a fantastic one in terms of analysis. I wanted to highlight that simply because it really laid out two things. One, the patience required in order to trade this market on the daily chart, and two, how important it is to monitor fluctuating volume with the associated price action following Anna Colling's rules and a complete guide to volume price analysis. If you have any questions about anything, please let me know. optionsmillionaire2020@gmail.com. You can come and join the Discord server, ask any questions. We are a teaching server, not a play calling server. I did roll out this trade live as I took it. And typically that's what I do. The swing trades are shared with the community so they can learn from me. If you haven't read Anna Colling's book, again, it's the complete guide to volume price analysis. I suggest you order it from Amazon and give it a read. I promise you it'll change your system for the better. I appreciate you taking the time to watch this video. Until next time, I'm Andrew with the Options Millionaire community, and I'm out. See ya!